Well, hey there, everyone, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a continued focus on seasonality, including examples of combining seasonality with technical analysis, when to use the 5-day and 10-day window, are grinders or breakouts best for seasonality trades? Should seasonality be for starting analysis or just for confirmation? Can we rely on seasonality without technical analysis? And can seasonality be used for income trades? And lastly, how to use seasonality to avoid taking action. And as a bonus, Roger's going to share how to combine seasonality with time spreads. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Now, the chat is open to everyone, so remember the ground rules, folks. Be kind, keep to the topic, no political discussions at all. Keep your side conversations to a minimum and focus on the education and information that Roger is sharing, because he's here to give us an edge and to help us become more confident and consistent in our trading activities. Now, in this morning's pre-market show, Roger shared a lot of information with us. He started off by sharing his small cap watch list. And let me go ahead and copy and paste that and put that in the chat panel for you all to see, for those of you that may not have been aware of it. Now, things to remember about these small caps. The key is price action and extreme volume. Those are the selection criteria that Roger looks at. Secondly, remember, folks, small caps are not market dependent. They're on an island of their own. They're whatever else is going on holistically in the market doesn't impact them, because institutional dollars, okay, they're not involved in small caps. It's retail investors like ourselves. And lastly, if you like any of these trades, please only trade them during market hours and ideally before 2 p.m. in the afternoon. If it's after 2, just forget about it and move on. And also, these are not positions you want to hold overnight. Now, as far as Roger's catalysts for today are concerned, and you know what the catalysts are, right? That's information that is known but not yet priced into the market, okay? So there's the Fed. We had CPI that was coming out at 7:30, and it did come out in line with expectations. We had jobless claims come out, and they are at almost 4-year highs, so that's a red flag. And we also have a 30-year bond auction that's going to be coming out this afternoon. So those are the Fed focus issues. Also, in the consumer sector, we noted that Kroger was up 2%. In the chip sector, Micron MU was up about 9%, and AMAT was up about 4%. We also noted that in the transport sector, UPS was downgraded. Now, as far as Roger's daily stock list is concerned, and once again, he shares several of these with us, and I'm also going to post those in the chat panel for you all to see in the event that you don't have that information. And there's a couple of things that I want to point out. As far as the shorts are concerned, you'll notice there's an asterisk by FUN, UPS, and ACVA. And the reason there's an asterisk there is that when Roger brought them up on the charts, he says, man, these are nice setups as far as the pre-market is concerned. And the same could be said for Reddit, RDDT. Now, remember, this was a pre-market look, but he certainly put a star on those and said they're worth watching. And to that point, if you're looking at any of these stocks, folks, just make sure, absolutely sure, that if you're going long, that you've got a clear breakout signal that you understand, or if you're going short, there's a breakdown signal that you understand and is confirmed. Now, as far as Roger's closing comments were concerned, he basically said, look, folks, bonds are up, but they're consolidating, and we need to watch bonds around key areas of support and resistance. And he shared that with us all. He also said that blue chips look stable and SMH looked nice and strong. He also said, the QQQ and the SPY were looking good, in particularly after the CPI report and the movement in bonds. But he is and was concerned about QQQE, which is basically the QQQ without the Mag 7 stocks, and RSP. He said, let's look and make sure that the MAGs and the RSP, that they don't diverge from one another, because that would be a bad signal and could be a tip-off to market direction, either up or down. So from that perspective, once again, those were his closing comments. And as we get ready to open today's VIP session, I want to remind everyone of what today's agenda is. Roger is going to have a continued focus on seasonality. He started this session yesterday. He'll conclude it today. He's going to give us examples of combining seasonality with technical analysis. He's going to share with us when to use the 5-day and the 10-day window. He's going to tell us, are grinders or breakouts best for seasonality trades? Should seasonality be for starting analysis, or should you just use it for confirmation? Can you rely on seasonality without technical analysis? Great question there. Can seasonality be used for income trades? And lastly, how to use seasonality to avoid taking action. And the big bonus here is Roger's going to share with us how to combine seasonality with time spreads. Now, if you've got questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, the chat is open to everyone. So remember the ground rules. Be kind, keep to the topic, no political discussions at all. Keep your side conversations to a minimum and focus on the education and information that Roger is sharing, because he's here to give us an edge and to help us all become more confident and consistent in our trading activities. And with that, let's say hi to everyone. Hey there, Matt. Hey there, Roger. We also have Kane in the house. My gosh, what an elite lineup.
We got a great group here. We got a great group.
Yeah.
So, real quick, we're going to start off with Kane showing us. Yesterday, Kane gave us a little teaser on what he has planned for the weekend. But I asked Kane to come back and give us a little teaser so that we can kind of see it. It's one thing hearing about it. It's another thing looking at it. So I want to give Kane the opportunity to do that and drop another link. And then I'm going to have another session for you guys. And we're going to I got a lot of questions that need to be answered in terms of seasonality. I want to go over that spreadsheet I showed you yesterday, the one that Matt put together for us. I want to show you some time spread examples that you could use seasonality for that works really well, actually. Something that most people don't use, and it works fantastic. And most importantly, show you some stocks. So we got a lot of stuff to talk about today. Let me make sure. Can you make sure that? Let me make sure all the email. Hold on one second. I'll double check. Did everybody get their?
As you notice, Roger, look behind me. Everybody on the trading floor is here because they want to hear what Kane has to say and what you have to say. All trading activity is stopped. They're all piled in behind me, and they want to hear what's going on.
That's all right. Well, perfect. Let me say hello to everybody, and then we'll begin, okay? People are a little slower than usual. We had a lot of people this morning, but people, I guess, are all focused on the market right now. Hey, Cliff, how are you? Michelle, Ron, Stacy, Gus, Jill, how are you? Lugarofalo, I think I said it right. Deborah, Michael, Raindog, Marina, Catherine, Ivana. Look at that. We got two people from Hawaii. We got Catherine and Marina. That's pretty cool. Ivano, Louie, Shannon, Cyrus, Joe, Michael, Mary, Brendan, Tim, Ann, Andrew, Eduardo. We got two Tims. Eduardo, Rosalind, good morning, everybody. Good morning, HG. Good morning to you. Andy, good morning. On YouTube, we got Richard, we got Don, we got Deanna, we got SG, we got JB, we got Patrick. Got a lot of people from Hawaii. Hey, Patrick, I like this. In Hawaii, it's only what? It's
I was going to say they're just getting
it's
up, right?
6 o'clock in the morning right now.
Breakfast time.
Going from Los Angeles to Hawaii was painful. It was going 3 hours back. It's like going from here to LA. But going from New York or, Florida to Hawaii, oh man. Whew, that would be brutal. Imagine waking up at 2 o'clock in the morning, just like staring at the walls. I know it happened to Graham. He told me he went to Chuck's condo one time, and he's like, I was staring at the wall at 2 o'clock in the morning. But I guess you can get a lot of work done, and you can do some trading. All right. Are we still on YouTube, Matt? Just want to make sure we're on YouTube. Yeah, we are on YouTube.
We're
Okay,
definitely
cool.
on YouTube.
All right, folks. Kane, why don't you take over the screen? Or actually, don't even take over. Nobody's doing it right now. Take the screen. There you go.
I will do that.
And show us the goodies. And Matt has the CTA link. He will drop the link on YouTube, and he'll drop a link on Zoom so that folks could attend on Sunday. There's the link. And
All right.
I can
Awesome.
drop it actually here.
All right.
Yep.
So let me make sure I can still see the chat. Cliff, you had a question before Roger came on. In the course of me showing you this stuff, I will answer your questions. So pay attention. Pay attention. I'm super excited about this. This is something that I've been working on for a very long time. A lot of people, when I released my flagship product, which is Gamma Pockets, the Gamma Pocket payouts, a lot of them saw me using my personal software and how I identify these Gamma Pockets. And a lot of people are like, hey, can I get that? How do I get my hands on this? This is how you get your hands on it because this is much more beautiful, much cleaner, and much more stable than the software that I program for myself. So why would you be interested in something like this? So there's two portions. There's this Gex scanner, which scans for opportunities. That is pretty exciting. Won't put most of my focus on the scanner today, but these are opportunities that say, hey, the market maker might get behind these and start driving prices one way or the other. And I'll explain that in a little bit. But for me, the super exciting part is this single ticker analysis. And I wanted to show you a couple of cool things that you can do with this single ticker analysis. So first, I prepared a couple of ticker symbols that I like, and hopefully Roger likes too. We'll see if he approves of my picks over here. But let's get these two windows together and just say the one that I like is WIN, and another that I like is GD. Okay, so based on these charts right here, what do you guys think? Do you guys like these? Do these look like good opportunities to you?
Oh, GD looks great. What was the other one? WIN?
WIN, yep.
Actually, they both look fantastic for different reasons, but I do like both
Okay.
of them quite a bit.
So let's just say you were trying to pick between these two, and they look fantastic. They look fantastic for different reasons. Which one? How would you decide? Let's say that you only had enough money to allocate to just one of them. You couldn't take both of them. So how would you decide between WIN and GD? Well, one way that you can do it is with this software right here. So what the Gamma Pockets do, they show you areas where the market maker has a lot of risk exposure. And if we get near those areas, or if we start moving towards those areas, the market maker has to hedge themselves. And so they'll add their power to the underlying, to the market, and potentially start driving prices towards a particular region. So one thing that I might be interested in when I'm deciding between these two is hey, is the market maker going to help me if this moves higher? If the market maker isn't there, it doesn't mean it's not going to move higher. It doesn't matter. It could still move up. But if the market maker is there helping you, you could get to a target much faster than if the market maker was not. So that's why you might be interested in something like this. So if I take a look at WIN, I can compare it to GD. So I can go over here and I could take a look at WIN. A little slow at the moment. There you go. And when I look at this, what it's showing me is right here. This is today's price action. That's in a 5-minute chart. So what we see is that there's not a lot of gamma immediately above it There is some below it. There's a large green bar. And if I zoom out, there's very tiny amounts of gamma above WIN, but there's that large gamma pocket right there at 120. So I can come down here and I can visualize it the same way. Huge gamma pocket right here.
Kane, it looks like
Yep.
things may be frozen or we're not, if you're moving your cursor, we're not seeing things.
Oh, okay. Let me maybe stop.
Oh, there you go. I
share.
just saw your cursor show up there. Okay, there we go.
I'll stop and share again.
Okay.
You were making so much sense. And I was looking at the screen and other people are going like, oh, okay.
Yeah, we weren't seeing the right stuff.
Gotcha. Yeah, sorry about that. So hopefully, can you see it now?
Yes.
Oh, yes.
Yeah.
Okay.
Okay.
Awesome.
Now we can
Okay.
see it.
Now we
All
got
right.
it.
So we've got this giant gamma pocket right here at 120, and then a kind of much smaller one at 125, and a little bitty one at 130 and 135. So there is some risk to the market maker if we move higher, which means that they'll buy underlying shares if we move higher, but it's nothing compared to this huge one right here. Now, the good news about this is that this would act as support. There's a huge amount of support at 120. So if I like WIN and I want to trade it, I could potentially say, well, maybe I won't get a lot of support from the market maker. I still like it, but I could put a stop loss if it breaks below 120. And sometimes I know Roger likes the EMA 15. That's what I've drawn right here. I prepared this chart especially for you guys. So that EMA 15, you say, okay, that EMA 15 is over at 120.87. But you know what? The market maker really has my back at 120. So I could consider a somewhat lower, not that much lower, just a little bit lower stop loss on this one, knowing that the market maker could step in and defend that 120. So that's one way that I can use that Gamma software. And now I can compare it to GD and see if there is a different story with GD.
I love this, man. This is great. Yeah, we weren't seeing the second part of it. We were just seeing the stock trading view. We weren't seeing this.
Ah, gotcha. Yeah, well, this is
pretty
definitely
sexy stuff
where they
right
get
Yeah, this is really cool.
So here we see that actually it looks very different than WIN. So we do have a large gamma pocket, actually the largest gamma pocket right here at 330, which is immediately above where we're trading at 326 right now. That's about $4 or $3 and change in room. So about 10% of, 1% move right there. And so that will act as a magnet. And the great news about GD is if we manage to get beyond 330, so we trade up to 330, it could keep going. The market maker will add its support if we trade to, for example, to 332. The market maker is going to start hedging themselves more and more as we get to 340. And then again, if we bust through 340, the market maker is going to add to their hedging and they're going to add their buying power to GD and move it up towards 350.
So beautiful.
So now you've got a comparison of WIN is safe because you've got the market maker backstopping you, but GD looks like it could run quite a bit, potentially all the way up to 350, but 330 looks pretty assured, and we can visualize that down here as well.
Very nice. Very, very, very useful. And what I love about this is that it doesn't really matter what strategy or what guru you use. You could use this as a filter for just about anything.
Right.
Kind of like, hey, this is where I think it's going to, the next level. It's kind of like getting my levels on a daily chart for swing trading. That's kind of like, that's probably the best way I could describe it. This is like, you know how I give you guys levels in the morning for the S&P for intraday 5 minute? Well, this is like getting daily levels on a chart based on market internals, which is, as you guys know, there's nothing like market internal. This is no Bollinger Band, guys. This is no ATR band. This is the real stuff. That's really useful and it's clean, and I love that. That's great, Kane. I cannot wait. And you'll show us some more examples over the weekend.
Yeah, absolutely. Actually, if you have 2 minutes,
I do.
Go
for it.
Yeah, okay.
Go for it.
So 2 days ago in my post-market analysis, I identified OKLO. So
I'm
right
looking at it
here.
right now, actually.
Oh, nice.
Yeah.
So what we identified it right here. And yesterday, with this downward move, someone actually asked me, "What do you think of OKLO now, Kane?" I said, "Well, nothing's really changed." So right here, we identified this, and one confirmation that I had was using this software. I went in and I took a look and looked for a gamma pocket. And I decided that I wanted to do a very short-term trade. I said that, hey, I only want to hold this up to this Friday. So I was looking for a very short-term trade, and I was looking for if there's a possible move in a short-term trade. And what we saw was this 80 gamma pocket right there. And one cool thing is that we can look by expiration. So if I can ignore everything except for this week's expiration, what I'll see is that it's still there and is actually quite significant. And then we're actually backstopped at 74 over here. So I felt at that time, oops, wrong one. Where was it trading? It was trading at about 74. Okay, where this gamma pocket was. So we are already at this gamma pocket. I said we can hit the next one by Friday. And it's looking good, nice, beautiful uptrend. And so I set a target. I bought a September 19th 73 strike call at about, I think it was about $4 where I bought it. And today, here we are. We already hit that gamma pocket. They were very close to it. The high was 79.68. I set my target at 79 because of this potential horizontal resistance, this potential supply right here. So I chose 79 instead of 80, and we hit it today, and that's about a 70 to 80% gain right there. So
Beautiful.
that's another way that we use it. Yeah.
Very nice. Very nice. Very clean. Simple. I cannot wait to the weekend. Matt, can you drop some links again for both screens, for both YouTube?
Yeah.
You there?
And Kane, if you've got a second before you go, a number of people are going, just real quickly, elevator pitch. What is a gamma pocket?
Okay. A gamma pocket is an area where the market maker has either sold or bought a lot of options because the market maker doesn't have a choice.
Right.
They don't get to choose their position. So if we come in and we say, hey, we want to buy 1,000 call options, they don't have a choice. They have to sell. So because they can't pick their positions, then they really need to hedge themselves. Otherwise, they could lose a whole bunch of money. If you happen to be right about the options that you bought, then they have to pay out on that. So they have to hedge themselves. So those gamma pockets, those lines, those really long lines that you saw on the screen are areas where they have a lot of risk. And so they have to hedge themselves a lot. So if we start to approach those prices, they're going to hedge themselves by either buying or selling the underlying stock.
Which is essentially going to be accelerating the move. Yeah.
Exactly.
Or holding the move.
Or holding the move, right.
Yeah.
Folks, let me explain it to you in one sentence. It's periods where market makers get aggressive. It's areas where market makers get or become aggressive. Okay? If you want to know what it is that's what it is. That's exactly. In order to have something like that, in order to have a move, you need to have one side being very passive and one part being very aggressive. Can't have a move one way or the other without that happening. If both are aggressive or both passive, nothing's going to happen. One side has to be passive, one has to be, passive aggressive. Well, in this case, one side has to be passive, one has to be aggressive. For this to occur, you need market makers to become aggressive. And we'll talk more about this Saturday and Sunday. I'm looking forward to it. It's going to be fantastic. Thank you, Kane, for sharing this with us. I really do appreciate it. This is going to be great. And what I love about the software, you could use it for you could use it to give you those levels for anybody's. If you want to know where a specific level is on one of my stocks, you could do that. Kane stocks, you could do that. So it's very, very, very. It's just very, very cool. But those levels are very, very important. They're a lot more non-random
Yeah.
on a daily level than they are on my levels. On 5 minute levels, there's a lot more randomness, noise than on a daily chart. So imagine me giving you those levels. I could do it with my eye, but most of you guys cannot do it with your eye as of yet. So Kane giving you that allows you to do it on any stock you want, which is really, really good. But if you want to know what they mean is it's not periods, but price levels where market internals are becoming non-random, when they're very aggressive, when market makers are aggressive, when they're exercising aggression. Okay. All right. All right. Thank you, Kane. That was very, very cool. And Matt, we'll post the link again tomorrow morning in my I posted it this morning, and I'll post it again in my show. So we'll have a very, very big audience. I completely booked off my weekend for this.
Yeah.
I'm spending my entire weekend on this, so this is going to be fantastic.
And I
Again,
just want to make
yes.
a comment here. There's a lot of questions that came up about this. And guys, once again, this is kind of a tease. Once again, he teased yesterday. He showed us more today. But all of this is going to be covered in much greater detail on Saturday. And there will be another presentation on Sunday. So please come for that. And then that's where we'll be able to answer your questions. Kane, thank you so much for this. I'm excited too.
Thanks for doing that, Kane. I really appreciate it.
Awesome. Thanks, guys.
Okay. All right. So, folks, let's now talk again about seasonality. We were talking about seasonality, and I want to answer some questions for you. But before we get there, how about I give you my watch list? I didn't give you my watch list yesterday, so let's start off with me giving you my watch list. Now, folks, there's going to be a lot of things today that we're going to be talking about over the next hour and a half, where you're going to want to write this down. And I'm not trying to sell you anything right now. I'm literally telling you, you're going to want to write down a lot of calendar dates. Or what you can do, if you'd like, bust out a calendar. And you could do this on a calendar too. It's easier on a calendar, actually. So if you have access to a digital calendar, it will be very helpful. Or just get a notepad. But doing what I'm going to doing what we're going to go through the exercise over the next hour, even when we have the deck and all those dates, it's really nice to have that. Okay. It's the same. No, this is not the same thing, Keith. We're going to be talking about. I'm moving on to seasonality. We got a lot of questions, and I didn't finish yesterday, so I'm going to do that. Okay. Okay. So first of all, let me give you technicals. Okay. Let me give you technicals. This is the short side first. CMG, STZ. Please focus right here on the left side, not this side. That way, that'll help. STZ, TTD. That's a beauty right there. Beautiful right there. And virtual. Now let's look at the long side. PHM, which I'm really liking right now. ELF, which I really like right now. Can't give you that one. We already put it in Quick Strike. Home Depot, which I really like right now. Lowe's looks great too, by the way. So one to a customer, okay? Lowe's. Roblox. Roblox looks really, really good right now. Looks really good right now. There's some good stocks setting up right now. UNH is setting up nicely. VIC. KTOS. I really like this one a lot. Guild is setting up nicely. And Oklo is setting up nicely. I just gave you some really nice stocks. Really, really nice stocks. All of them are very nice. For example, there's several here that are competing against a trade in the PID this morning, and one of them already went into Quick Strike. iPhone, I'll repeat them again, okay? And how about I post them for you, okay? Shorts. I want to cover a lesson. That's why I'm going fast today. Shorts. CMG, STZ, TTD, VERT. Those are the shorts, okay? Longs. PHM, GNR, no. ELF, Home Depot, Roblox, VIC, KTOS, Guild, Oklo. Now, you may notice something interesting. You notice how many tech stocks are in this are in the long list? How many tech stocks do you guys see that are in the long list? Do you see many? I should probably open up the chat because I can't see what people are typing. If I don't, it's going to be kind of hard.
People are
Okay.
basically going, don't see any, don't see any, don't see any. Yes.
I mean, there
Michael
may
says
be
yes.
one,
No,
but
no, no.
but
Yeah, but it's
this
really,
this this is
yeah.
not the mega cap list, right?
No,
This
it's
is not
not.
a bit. Do you guys understand where I'm going with this? You guys see where I'm going with this? Now, to the
Mhm.
downside, to be fair, to the downside, what I'm seeing right now is a lot of consumer staples, supermarkets, restaurant. Are you noticing the same thing, Kane? To the
Yeah,
downside?
yeah,
Yeah, yeah.
yeah, absolutely.
Like Albertsons was on my list. What is that? SF. I remember ticker symbols, but I don't remember the name of the company. SFM. What is SF?
Sprouts.
Sprouts. Sprouts was on my list. Albertsons was on my list. Sprouts was on my list. There was another one. There was three on my list. There were three supermarkets on my list. Kroger. There was like two, three restaurant fast foods, food related stocks. So a lot of stuff relating to restaurants, consumer staples, going out, that kind of stuff. Chipotle, another one right there. So a
Yeah.
lot of them are on my list. So Mendelez, CMG, exactly. STZ, you getting it right, Hal. Exactly that. So I'm gonna go ahead and close the chat again. I don't want to miss mess this up. So there's a lot of stuff going on right now with that to the downside. But other than that, I'm really not seeing a lot of stocks breaking down. And it's gonna be very hard for you to find stocks breaking down when the market's making a swing high. I'll get into seasonality in a minute. I just want to finish this segment. So what I have to say right now is not all that different than what I had to say this morning. You see this right here? This is the standard deviation band from the moving average, but it's not based on a math formula. It's based on 1.5 ATR. So it's actually using these price levels to tell us if these price levels are getting extended beyond themselves. So it's actually pretty good. Like you could see how we came down here, we came down here. Now, it's not a perfect science, but if you notice, folks, let's be reasonable here. We went from down here all the way up here in 1, 2, 3, 4, 5, 6, 7, 8 sessions, right? And this is really important, actionable stuff. I would totally be paying attention to you right now. Okay, to me right now. Uh, do you see this right here? See how we're touching it? That's a red flag. That's a red flag. Let me show you this. Look at QQQ. See how when we go up here, look, boom, and what happens? Bam. Boom, bam. Also, can you imagine me doing this on CNBC? So, Roger, what are you seeing? Boom, bang. Boom, bang. They'd be like, who the is this guy?
They'll give you a show just like Kramer.
Exactly.
Just for the sound effects.
Exactly. So you could see it right here on the Nasdaq. Again, this is not a perfect science, but I'm just telling you that we're getting a little ahead of ourselves, and tech is not leading right now, and the SPY is. And I warned you that we're at a precipice of this, and tech is not leading. Look at QQQ. QQQs, the tech is not leading. Mags are not leading right now. SMH is not leading right now. So if we have a sector rotation out of technology, then mags will pay the price, even for 2-3 days. But this is a little too much too fast. So I'm very, very hesitant to put on tech positions or positions in stocks that have run away with the circus, if you will. Okay. That's why I like a lot of the stocks like Okla. Okla hasn't really run away from the circus. And this is the kind of stock people would put their money into if tech decided to have a little cooling period. So again, just wanted to kind of give you that. Okay, so let's now go back to where we started. I wanted to answer some questions for you. We had some really good questions, and I want to give you some good info. I don't want to waste time with this. Okay, so when do you use the 5-day window and when do you use the 10-day window? Remember I told you I use two two type of windows. I use the 5-day window and I use the 10-day window. And the answer may not be what you think. You probably think, well, he uses the 5-day window for swing trades, and he uses the 5-day window for very short-term trades, and he uses the 10-day window for longer-term trades. That's actually not true. No, what I use is I use the 10-day window for the big picture, for the macro view, and I use the 5-day for the micro view. So if I want to know what I think is going to happen to the overall tech sector, broadly speaking, I'm going to look at the 10-day window because it gives me a much bigger, it gives me, it's like my target goes from being this big to being really big. I want to know if I'm going to get tailwind. And then when I move in for the kill, then I look at the 5-day. So in essence, I want both the 5 and the 10-day to be telling me exactly the same thing, obviously. But the 10-day I use more for overall sentiment, and the 5-day more for taking action. A lot of folks thought I used that differently. So I don't. Just wanted to make sure you guys understand that. Another question. Do you trade grinders or breakouts for seasonality? Okay. So let me show you the difference between a grinder and a breakout. Okay. So I'm going to use this stock as a perfect example of a grinder versus a breakout. When you see a stock just moving like this up the 8-day EMA, I think GE actually, like GE right now, that's a grinder. That's a grinder. How do you know it's a grinder? Well, even though you're making higher highs, when you look to the left, you see a lot of stuff. The only difference between a grinder and a nothing is the slope. In other words, if this slope was not at 20 degrees, if this slope was even with the ground, this would just be chop, 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 chop. So the difference between chop, 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 chop and a grinder is just the slope. You're not really seeing a major breakout here. Okay? All right? Now, this is a breakout right here. That's a breakout. So what stock were we looking at right now? We were looking at, what was the stock we were just looking at? Anybody remember? See how everybody pays attention? Was it GNRC?
OKLO was the last one you had.
OKLO. Thank you. OKLO. Thank you. It was, I thought it was GNRC. OKLO. So this stock, see, if I look to the left, if I go all the way up here to the high and I look to the left, I can go pretty wide. I can go beyond 1 or 2 bars, right? That's a breakout. That's a compression right here. That's a breakout. Assuming, not a confirmed breakout, but it is a breakout if it takes trades above this level right here. As you could see it right here. We were here as well. So we need to trade above the current level. So if we went up to here, for example, that would be a breakout because there would be nothing to the left of us. So to determine the difference between a breakout and just a grinder is simply looking at the slope versus a move to the left. Okay. So this looks like a breakout, actually. Well, not right now. Right now, it's just we're back in this range. But right here, that was a breakout. If you bought GE right here, you would have bought on a breakout. This is not a breakout. There's too much stuff right here. So this is a grinder. This is all daily. Everything I'm talking about is daily. I don't do any analysis on 5-minute chart. 5 minutes are conclusionary for me. Okay, so now that you understand the difference between grinders, right? Grinders and breakouts. Now that you understand the difference, now that you understand the difference behind them, okay, you could understand the difference. What works well for seasonality? You'll be surprised at the answer. Grinders. Grinders actually work better for seasonality. Why? Because the seasonality is not capturing an outside move. It's designed just to give you tail big for the existing move. So when I see a catalyst or when I see price action trading outside, which is a breakout, I want to make sure there's something else behind it. So if you have a breakout, that's fine. But the breakout and seasonality, they don't really intermix. So I prefer grinders. If someone told me that industrial stocks for the next 10 days would be very strong, which they're not, and if somebody told me over the next 5 days the GE would be strong, and I don't know if that's the case or not, I may be tempted to buy GE, or I would just buy GE off of the 8-day EMA, and obviously I wouldn't go chasing here. But grinders are actually have a higher probability with seasonal stocks than basically stocks that are just moving real slow, that are not moving too fast, that are not being influenced by news. Because think about this. Think about this logically. What supersedes and breaks technicals and breaks all the stuff that I do? There's one thing that breaks everything I do: fundamental news, right? We can have a beautiful chart, and then Trump can come and say something, and I'm not picking on Trump. I'm just, you guys see it all the time. Or a company can come out and say, well, our earnings are not going to be as great. And so technicals are great, but catalyst, you need a catalyst for a big move. You need volume, a catalyst. So usually you know what's happening. There's something happening. So if I'm looking for if I'm looking for a breakout and I'm seeing seasonality, I want to know what that catalyst is. Okay. Otherwise, I'll just stick with grinders. Grinders tend to work really, really, really well. Really, really, really well. Okay. Let's go to the next section. This is a great question. I get this all the time. This is actually a really good question. I'm really glad we're doing this. Hopefully this is benefiting you guys and answering a lot of your questions. Should you start your analysis with seasonality or use it as a confirmation? That is a great question. That is a great question. And Zoom user, you're funny. That's a great question. And the answer to that question is, it depends. It depends. So here's usually how I do seasonality, okay? Because I've been doing this for a very, very, very long time, I don't need to have a step-by-step approach. I'll know real quick if I'm missing something. I don't need to worry about, oh, am I following this rule? I understand why I need that rule. So I don't get confused a lot. But a lot of you folks, you're very like, okay, this is the recipe. I look here, I look here, I look here. So I want to give you the answer based on a recipe, and then once you learn the recipe, you can do whatever, you could do it however you want to do it. The first thing you want to do is you want to look at the 10-day seasonality. That's where you want to start. So if you like a particular stock, let's say you like a stock, ask yourself, what's the seasonality for the sector going to be for the next 10 days? So you want to stock with the seasonality of the sector over a 10-day period. It's a great way to start. Then look at the individual stocks technically, and then look at the individual stocks on a 5-day seasonal. So let me explain this to you again, okay? If you are thinking about a specific stock, the first thing you want to do is check the seasonals for the sector for 10 days, okay? All right? For 10 days. And then after you find the seasonals for 10 days for the sector, so you know that the big picture, basically, you're not expecting rain in your state in the next 10 days. Now, or you're not expecting rain in your city for the next 10 days. Now let's go to the area you live in. Now look at the technicals. Because here's the thing. If the seasonality's crap on that sector, looking at each individual stocks technicals probably is not the best idea already, unless you have a lot of tailwind from the market. Like right now, we have a lot of tailwind from the market. Market's really strong right now. But getting back to getting back to our analysis, you want to start at the 10-day sector ETF. Make sure that's kosher. You only have 7 sectors, and we have all of them in data miner. And then you want to make sure, technicals are good on the stock. Now, what are you going to be looking for technicals on a stock? Real simple. You want a nice smooth move against the 8-day, 15-day EMA, and you want a nice clean trend line. Okay, you want nice glide. We've talked about that many times. Not necessarily a setup, just a nice looking move, at least 20-degree, not a lot of overlap, not a lot of stocks that look like where you don't know where the hell is going to happen, because we know exactly, we know exactly what to anticipate. We're not looking for anything crazy here. Okay. Now, one of the things we do look for is how deviated the stock is from the 8-day EMA. So, like this stock that I'm looking at right here. Oops. Notice it doesn't have any deviation from the 8-day EMA. That's really good. That's very attractive. And you look to the back, you could see it's compressing for several days, and now it's starting to break out again. I like the stock. I think we did this as a bonus trade in the VIP room. All right. Alrighty. So let's go to the next question. This is a good one, and this is a question I get all the time. This is a great question. Matt was a believer in this for about a week until he changed his mind. Can you use seasonality without combining it with technical analysis? Okay. All right. And Joseph and everybody else, Raleigh will answer your question. He will answer all your questions so that I can continue doing what I'm doing. So the question is, can you rely on seasonality without combining technical analysis? Unfortunately, I've never seen it work profitably that way. Well, Roger, then why not just use technical analysis? I've tried using technical analysis without seasonality, and my win rate consistently is poorer without it. Consistently. It gives me that tailwind. The way I explain it to folks, and I've explained it many times, it's like having a Bloody Mary that doesn't have one of its ingredients. Think about it. It'll destroy everything. Can you imagine a Bloody Mary without salt? Can you imagine a Bloody Mary without vodka? Can you imagine a Bloody Mary without it being cold? See, you take one thing away from a Bloody Mary and the whole thing goes out the window. The hot sauce, exactly. So it's a perfect example. It's going to have to be, or imagine eating sushi without soy sauce. You get my point. So yes, it can be done, but it tastes a lot better with a little wasabi and soy sauce. You guys get exactly what I'm saying. You guys know what I'm talking about. Okay. So it always works a lot better when you combine it with technicals. They were meant to be together. Just like Kane's program with those levels, it's great for levels because you guys will be able to see the levels that market makers are putting their delta at. Okay. All right. So unfortunately, folks, now Matt loved seasonality when we first launched Data Miner. Actually, before we even launched Data Miner, Matt was so excited about the seasonality thing, he put in a couple of trades without it, and boy, oh boy, he learned very quickly. He learned very quickly not to do that. How are we doing on that quick strike stock, Matt?
Not good.
Okay. All right. So you don't want to do that. Big mistake. Okay. Here's another great question. Can you use seasonality? Can you use seasonality with income trades, with credit spreads? Well, I'm going to share this with you, and I've never talked about it before. Seasonality works really great with credit spreads, and I'll tell you why it works really great with credit spreads. Remember, I told you that it works better with grinders and not breakout trades. Well, for the same reason, it works great with income trades. How do I like to trade income? I like to get close to the sun, right? I like to get real close to that 8-day EMA. So what I do is I make sure if I have a grinder and I have a great 10-day and 5-day seasonality, that's a perfect recipe for an income trade. So not only does it work really, really good for a credit spread, aka income trade, but it works better for an income trade than it looks for a directional trade, because with an income trade, you don't need to worry about direction. It just can't go below a certain level or beyond above a certain level, and that's it. So really, really well with that. Um, and lastly, and this is something I wanted to, a lot of people emailed me yesterday. They were like, what you started talking about yesterday was really interesting. Can you share more? And this is where we talk about using seasonality for time spreads. Okay. So remember, guys, I showed you this yesterday. Let me, kind of going fast. Are you guys getting all this? I want to make sure, are you guys getting all this? Ruth says this is amazing education. And
Absolutely.
look, nobody's interrupting me. It's amazing. All right. I just want to make sure that you guys are, because I'm not getting any feedback. So I don't know if, not here, Bill, not the right place for it, Bill, not the right place for it.
Got you covered. You're
Yeah.
moving with pace, and I think people are enjoying that. And
Good.
there are some questions that have come up, like what is seasonality and things of that nature. Roger, I know your presentation, and these are all answered in the
Yeah.
information to come.
Yeah.
They're great questions, but guys, just settle in, pencil and paper, note your questions. Many of them will be answered in the presentation.
Yeah, like 80% of them. And if not, I'm going to have a presentation in about 10 minutes that I'll do. And it will, what I like to do, let me tell you how I've been doing things for the last couple of months. And Raleigh helps me do this. What I'm trying to do is I try to give you actionable information at 12 o'clock. And then I teach you from a perspective. And then I give you a webinar that goes over that information from a completely different perspective. So what I try to do between noon and 2 o'clock is to give you the same information completely two different ways. And it's been working very, very well, because like I'll tell a story or I'll talk about something I do, and then during the webinar it'll come up and I'm like, hey guys, we talked about this an hour ago. Remember this topic? So it gives people a lot more insight. Okay. So this way you get double whammy from two different sides going at you. And I find that that's very useful to teach. So it's been working out really, really well. So that's what I'm doing right now. And I'll do the other presentation in a few minutes, but let me do this. So let me show you guys something cool. Okay. Let's just stick with, let's see. Let's have some fun here.
Roger, is there a way to make that chart a little bit larger? Because I know people are having a little bit.
Yes.
There
Yes.
we go. Much better. Thank you.
Okay. Now, as much as I would want to use this information right now, I can't. And the reason I can't use this information is because if I do this examples, it'll be from the put side, and people have a lot more harder time with puts than they do with calls. It kind of calls them to makes them think backwards. So I'm not going to use this. I'm gonna use something a little different. So let's use this chart. Okay, let's use this chart. So let's just say this is a technology communication sector. Perfect. So this belongs to ticker symbol XLC. Okay? All right. I don't want to do the put side. I'm going to do the call side. It's easier for everybody. Okay? It's easier for everybody. So this is really cool. Okay? So I'll tell you what, why don't we just use XLC? This is the communication sector. It looks beautiful right now. Why don't we just use this? Okay? So let's say that Uncle Roger goes to his seasonality software and he finds out that for the next 5 days, here, let me show you my Picasso drawing. Now, folks, everything I'm showing right now is completely hypothetical. I have absolutely no idea what this asset is going to do, and I don't even know its seasonality for the next 5 days. So this is just all hypothetical. So look, let me show you this. Cyrus, I know this one guy who 9 months ago predicted that XLC was going to be the strongest sector this year. You know?
Who was that? Did he look like you?
I don't know. I don't know. So this is a great example. So this is the next 5 days. Okay. Here. This is the next 5 days right here. That's the next 5 days. Okay. And then the next 5 days after that, price goes up. Okay. Now, obviously, I don't have a crystal ball. And obviously, I have no idea if this is going to happen. This is just a total hypothetical. Okay. But it's a good one. Okay. So this is the next. So this is where we're at right now. This is literally today, and I mean that's today. That's not an example. This is right now, and this is going back 5 days, and that's going back another 5 days. So let's say that the next 5 days, seasonality tells us. Remember, seasonality tells us a year in advance. So for the next 5 days, we expect seasonality to be like this, and for the next 5 days, in other words, not next week, but the week following next week, we expect the third week, the fourth. So the third week of September, we expect this, and the next week after that, the last week of September, let's just say hypothetically, we expect this. Reasonable, right? Seasonality. So we expect absolutely nothing to happen, just crappy seasonality for the next few days, and then the last week of the month, this is what it's going to look like, right? Let's just say seasonality tells me that, okay? Now, look what I could do. So this is the graph. This is the picture. This is real, okay? So let me show you what I could do. I can go ahead. So look, 8 days from now, right? 5 trading days. That's 8. This is the last. Okay, so look. See this flat bar right here? That would take me all the way till September 19th. And you see the upside right here?
Mm-hmm.
That would take me all the way till the 26th, till the end of the month. So next week, I'm expecting price to do nothing. And the following week, based on seasonality and obviously based on price action. But I'll tell you right now, this looks exactly like that. It looks like it's going to consolidate and then it's going to come back up. That's why I think this is a perfect example, because I actually think it's going to do exactly that based on the price action. But again, I don't know. So let's use this example, and I'm going to show you how cool seasonality is. Check this out. Right now, we're at 115, right? Let's go to 115. This 115 call is $1, right? And then the final week's call is $1.30. We sell this one and we buy this one. How much do we pay out of pocket? Can anybody tell me? Exactly. Anybody else? Exactly. Okay, we're all in agreement, right? Not too bad, right? Okay, we pay 30 cents. We pay 30 cents. Let's say we're wrong. And instead of going up the last week of the month, it goes up next week. Okay? Well, guess what? You got a hedge. You have this can go to 1,000. This can go to 1,000. It won't, but it can go to 1,000 and you're hedged. You lose your 30 cents. Wow, you lost 30 cents. You were wrong on the stock. The stock went up to $1,000 and you lost your 30 cents. Mea culpa. What are you going to do? Right? And that's the worst case scenario. There'll be a period for a few days where you'll be able to arbitrage these against each other. It's one trade. It's a spread. You're selling the 115 and you're buying the 115. Okay? Not here, this one. You're selling this 115 and you're buying this 115 right here. 30 cents. We all agreed. There's no argument here, okay? Now, this is where things get fun. Next week, nothing happens. Nothing happens. Guess what happens to this option? It's going to be worth nothing. It's going to be worth 30 cents at best. Now, this option, you have another full week. So let's say this option goes from 115 all the way to 117, okay? this option is going to be worth at expiration $2. We're not going to wait till expiration, so it'll be worth about $2.75. But let's just say we wait till expiration. It's worth $2. How much did you spend? How much did you spend to get that $2? You sure as hell didn't spend $1. 30 cents. So you risk 30 cents to make, honestly, it'll probably be about $2.50, $2.70, but let's just say $2. It's pretty good. That's a cool way, and I've never ever seen anybody use seasonality that way before. And boy, oh boy, we're going to start doing it pretty soon because it's fantastic. And I've been doing it in the pit. So Dave, the point here is to get the big picture. We're not here for the details. We're here for the big picture. So do you see how cool that is, Raleigh? Isn't that great?
It's unbelievable, Roger. And you teased on this yesterday, and to come back and to explain it in much greater detail, it's fantastic.
Now, here's the cool part. Sometimes when implied volatility is high, you know how we just saw a spread of 30 cents, right?
Right.
Sometimes you'll see a spread of 5 cents. Sometimes you'll see a spread of 2 cents. Imagine doing that combination for 5 cents and coming out the other side with $2.
Roger, you've got something weird on the screen there.
Oh, sorry about that. I meant to put this.
There you go.
Oh, actually, you know what? I didn't mean to put that or this.
Too many monitors.
Too many. I'm telling you, I got too much stuff. Let me fix that. Let me fix that. I'll do it right now. Here we go.
These are called seasonal spreads, folks.
Yeah, I'm so focused on teaching people this stuff that I got hard to keep track of all this stuff. So folks, now I'm going to show you the benefit of seasonality, and I'm going to answer all of your questions, but I'm going to do it from a different perspective, okay? So if you're interested in what I just discussed, if it looks interesting to you, then you'd want to pay attention to what I'm going to say.
You bet.
Another reason why you don't want to go anywhere is because I'm going to give you 3 hot seasonality stocks before we end today, and this is going to be the last day to save. When I say the last day, I mean like a couple of hours, and we're done with this special. And then you will have to pay 2 to 3 times as much for a year instead of lifetime. So folks,
let's do this, Roger. Let me just interrupt you for a minute. For those of you that are on YouTube, I don't know, Matt, if you have the link for the Zoom room, but we need to turn the YouTube off before we go any further on this. So for those of you that are on YouTube, you're going to get a link where you can rejoin us here in the Zoom room. And we'll go from there. And that's not our rules. That's YouTube's rules.
Yeah. If we want, I'd like to, I wanted to have music in here and all that. And then YouTube is being a wet blanket about that. So now, folks, please don't go anywhere. I'm going to be giving you how many? Probably 40 different actionable seasonality dates right now. Would you say about 30, 40?
Yeah.
I'm going to get your notebook ready. We're about to start. So now you learned. Now